Morning, good afternoon, and good evening. I am Emma Joyce, Head of Community at Global Digital Finance, and it's my pleasure to welcome you to this Global Leaders Town Hall in partnership with the Global Blockchain Business Council, with special guest Dante Disparte, the Vice Chairman and Head of Policy and Communications for the Libra Association. Lawrence Wintermeyer, Executive Co-Chair of GDF and GBBC UK Regional Ambassador, will host this town hall and ask Dante about the current health crisis that is creating an economic crisis and a humanitarian crisis, how we are responding to the crisis from the perspective of global risk managers, as well as looking at the current state of play for the Libra Association. Dante Disparte is the Vice Chairman and Head of Policy and Communications for the Libra Association, a newly formed organisation that has brought together social impact organisations and a diverse group of leading businesses from around the world to create a low-friction, high-trust payment system that empowers billions of people. Dante comes to the Libra Association with 2 decades of experience as an entrepreneur, business leader, and global risk expert, most recently as founder and head of Risk Cooperative, a strategic risk advisory and insurance brokerage based in Washington, D.C. He has lived and worked in Europe, the United States, and the Caribbean, and has conducted business all over the world. In addition to leading Risk Cooperative since its inception 5 years ago, Dante also serves as an appointee on the Federal Emergency Management Agency National Advisory Council, the United States Federal Emergency Response Agency. He is a founding advisor of the Global Blockchain Business Council and a senior fellow with the Blockchain Trust Accelerator, where he supports technology and digital transformation initiatives. Dante is a frequent speaker and commentator on business and political issues shaping the world. His views on risk, economic competitiveness, and security issues are regularly featured in leading media and publications, such as Harvard Business Review, BBC, Forbes, and International Policy Digest. Dante is a graduate of Harvard Business School and holds an MSc in Risk Management from the NYU Stern School of Business and a BA in International and Intercultural Studies from Goucher College. He is the co-author, Global Risk Agility and Decision Making, Macmillan in 2016, and was recognized as one of the 40 leaders under 40 by the Washington Business Journal and in the inaugural Power Meter 100 list. We welcome and encourage your questions today. If you have a question, please feel free to submit it at any time using the Q&A box located at the bottom of your screen. I hope you enjoyed today's session, and I'd now like to welcome Lawrence and Dante.
Thank you very much, Emma, and a very warm welcome to Dante Disparte on our Global Leaders Town Hall.
Hello, Lawrence. Hi.
Well, I think that many people in the community will know you as the Libra guy, the voice of Libra in the last year, getting the first white paper off the ground, getting us now to the second white paper, and probably don't quite have an appreciation for the depth of your experience and your knowledge in risk management, the global insurance and reinsurance market, FEMA, and then co-author of this quite outstanding book on global risk. So I think for the first part of our Leaders series, which we're dedicating to COVID-19 and what's going on, maybe we can look at it with a risk manager's lens and try to put some of this into context for executives all around the world, and of course policymakers. So let's start with the crisis and the run-up to the crisis, Dante. We had a number of signals in the early stage that there was an epidemic, about to break out. Unsure in January around whether it would go pandemic or not. We had all of the benefit, the global experience of previous epidemics or pandemics with Ebola, SARS, MERS, but somehow, even with the WHO, what was emerging in Wuhan, many of us around the world seem to have missed the bigger signal. I mean, were we asleep on watch here? Is this actually a systematic failure from a risk management perspective?
Yeah, no, thank you, Lawrence. And I'm grateful, obviously, to you and to our friends at the GBBC and Global Digital Finance for the opportunity to be on air with you today. Indeed, we're going to discuss the present of risk and the future of payments and finance. And I assure you they're all related, very much so. So how did we get here? I do think events like this, of course, have a lot of signal, what the risk managers of the world would describe as signal in the noise. And the signals are, for the last 30 years or so, we have had a range of what are known as zoonotic diseases, diseases that jump from our proximity to nature and the animal species into the human species. And many of them, if not most, have been upper respiratory diseases in the same family as this very coronavirus that is affecting us today. So whether it was SARS, MERS, H5N1, and so on, there's a long series of drumbeats suggesting to the world that this type of risk and the specter of this risk going from a mere localized epidemic to a potential global threat was very much upon us. Back in 2017, the first US Secretary of Homeland Security, Tom Ridge, and I wrote an article in the Harvard Business Review calling for broader collaboration on all facets of preparedness for this very type of event. And so here it is upon us, and it's a very sad state of affairs.
Yes, it is. And, in the book that you co-authored, you make a point that many leaders and executives view risk or treat risk almost as a sort of single event or a static event rather than as a process. And in this case, a process with a lot of causal relationships. I also like that you make the point that the modern risk manager has to have not just a high IQ, but a lot of EQ or emotional intelligence. And so, where do we start as leaders with where we are right now if we put our risk management hats on to, put into context the next 12 to 36 months and how we get back to resuming life with the pandemic?
Yeah, no, indeed. And I think the point of oftentimes risk being treated as a discrete single event, that would be true of the way we handle most risks. We try to isolate them and qualify and characterize them. And if you think about one of the major instruments people use to manage risk, it's an insurance policy. And one of the major flaws in how insurance is handled is that it assumes all of the preconditions that were there before the policy was written remain constant over the 12 running months. And when I describe risk as a process rather than an event, what I'm partly trying to pick up on is the fact that it's dynamic and very fluid. And then how do we handle it now, right? I think a lot of times people try to obsess on how we got here, but in a crisis of this type of scale, whether you're dealing with it in a very local environment or have an obligation for a country or a region, how we got here matters less than what we do now. So I've always tried to bring out this notion of the value systems of an organization, a country, individual households really shine through in a period of crisis. And what we're realizing is that this type of stress event has put a big bright light on many facets of the global economy that were either weak or broken in the first place. And so the pandemic in a short few months has brought the entire global economy to a complete standstill. And so I think in that environment, the people behind the P&L and the sort of inherent vulnerability we have in many of our systems is right on the world stage.
Yes, absolutely. Couldn't agree with you more. And unprecedented, I think, is the word that I've heard more commentators use to try to encapsulate the crisis and what's going on, and certainly unprecedented in a generation or a lifetime. And one of the things I think the global economy, politicians and business folks are coming to the conclusion of is that clearly it is much more difficult to restart an economy that's been stalled as a result of lockdown and protecting citizens. And so, as we look at, this forbearance system that we have, which is based on just-in-time production, just-in-time distribution that we've shut down, what are the things that we need to start thinking about as we come out of that? I hear resilient a lot as well. This focus that you've just mentioned, that shone a light on a number of things that we think may be great opportunity now to really get better as we come out of things. But give us a view of where you think those sort of lights have shone and what we can improve as we come out of this crisis.
Yeah, no, that's a fair question. And I think, like all great crises before this one, and this one really should be characterized as nothing short of a global human crisis, not dissimilar, frankly, to the first, World War and the Second World War. Both of those big events gave rise to a range of institutions. Many have withheld and withstood the test of time. The Bretton Woods system, the UN, the World Health Organization, a lot of these international institutions were born out of crises, and they had a twin mandate. On the one front, stop and instill the types of preconditions to prevent these crises from occurring again. And the second mandate is to build the preconditions for shared prosperity, which would then sow peace. And so if you think about what this particular pandemic has brought to light, it has brought to light that we have anything but shared prosperity around the world. And that's not singularly an emerging and developing country reality. It's a reality in fortress countries, so to speak, such as the United States and Europe and many parts of the world, have deep systemic levels of inequity. And unless we come out of this with a view, and it has to be a long-range investment strategy, that we can shore up the very preconditions of long-term stability, beginning at the household level, extending to the community and ultimately the country, and then the world, I think we're going to be in for this again. If anything, past is prologue. And when you talk about public health outbreaks like this one, this is a 1 in 100 year pandemic, but it's not the last one we'll face for sure.
Well, and this is really at the juncture where many of us in my community, being led by Ray Dalio, we're all capitalists, and we're dedicated to democratic capitalism. But we, raised this point to look, we probably need to fix a few things, mainly in that inequity or the distortion that you speak about. And that, broadly, asset holders of wealth have accumulated at a greater rate than most average citizens, certainly in the West. I mean, this is a global issue in the West. And this is part of a root cause problem that I think a number of people are identifying, both at a policy level and, fundamentally at an operating level within capitalism we need to address. And so, are there particular things as we're coming out of this that you've focused on, particularly around inequity or inequality, that you see? Because again, we're sitting here at a time where folks like you are always looking at I think the global union and the collaboration, broadly of the system to come together, to participate in things. So you're mentioning the UN and the WHO and some of the, the supranationals that were set up after the Second World War. But at the same time, I think most people notice this is a period of time of, deep nationalism where countries are actually retracting and saying, gosh, whether it's PPE and shortages or vaccines, there's an existential question at a sovereign level of, well, what do I need to be able to provide myself? And what can I rely on the global system for? So are there are a few things that you see coming out of this that are great opportunities for us to galvanize and come together to start positively focusing on the type of outcomes that you're talking about?
Yeah, I mean, I do indeed, and I think you raise a very powerful point that when nature threw at the modern global economy this invisible enemy, as it's being characterized here in the United States, we literally turned to a hundreds-of-year-old playbook to respond with quarantines and lockdowns and social distancing and face masks. And the world, but for the fact that we haven't really collaborated deeply on pandemic preparedness for biodefense, each country, each community, each city has functionally gone it on its own. And I think in that, we have to come out of this remembering what unites us, the common sense of humanity, the common sense of vulnerability against these very stubborn issues that are grinding against the world. And then it's ironic as well that in a time of national retrenchment and the rise of economic nationalism, that we also have this great big threat that doesn't respect borders, doesn't check in with Homeland Security or the TSA here in the United States. If there's no reminder of our common sort of link and common humanity, this is it. And so on the other end of this, I would love to see things that, many of us who won the national birth lottery take for granted, become more universally accessible. Public health in an environment like this one, when you're uninsured or underinsured, conforming to a lockdown requirement is a twin indictment. On the one front, you have to do so because you potentially jeopardize yourself and others. And on the other, you lose your ability to gain any income. And so I think if this is the world we inherit, on the other end of this, the next decade after the pandemic is behind us, we really have to put long-term capital to bear on building greater levels of protection and greater levels of participation in the formal economy.
Yeah, I was caught the interest of some of the estimates on that point of preparedness, saying that, actually, we saw most of this or recognized most of this with SARS. And though we were fortunate enough in that it seemed just to go away, it was probably a bit of a curse in that it let down our guard or our preparedness. And so some of the forecasts that have been kicking around on the hundreds of billions, hundreds of millions up to billions we could have spent for preparedness, again, in a global and cohesive way. It is a global health threat and a global pandemic that's creating a financial crisis and potentially a humanitarian crisis. It isn't a financial crisis, as many people in our own community have been sort of labeling it. But that price of preparedness, as with many insurance premiums, looks relatively marginal now compared to the trillions that we're having to spend either in bailouts or in getting the system back up and running again. And so I really like this point that, one of the first taxis out of the rank here is global health preparedness for these sort of things, because arguably they're not going to go away. Let's move on to the insurance system. And I know you've spent quite a bit of time in the global insurance reinsurance system, and you're actually vocal about the innovation that broadly, leads to a lack of liquidity, which means that we're not actually protecting things at a reasonable or utilitarian cost to people, and so can you give us your thoughts on that, particularly in the context of the insurance industry? And then I know with your experience at FEMA, FEMA's been the public. Really the public financing arm of a lot of these natural disasters that we've seen in the US. And again, I would hope that there's learning in this, and particularly in FEMA's response to things for the rest of the world in this current pandemic that we're experiencing, which, should be treated as a natural disaster. And I'm not quite sure has been treated as a natural disaster by many governments.
Yeah, so no, you're absolutely right. The two sides of the world are very much interlinked. And so with the United States and the response to COVID-19, all 50 US states and territories have a declared federal disaster. This is the first time that's happened in history. But that's part of a trend line that is growing in terms of impact and severity and likelihood. So we have clustered in the last 30 years more multi-billion-dollar mega disasters in the United States than we have had since record keeping began. And that does say a lot. And one of the major challenges we have, and it speaks also to financial vulnerability on the risk side of the balance sheet, as much as it does on the asset side of the balance sheet, are very much the same. So we have a challenge here in the United States, which I think reflects the sad state of affairs around the world, which is that low-income families live in low-quality homes in low-lying areas. So when risk rears its ugly head and you see large-scale catastrophes, whether they're floods or fires or hurricanes, all very much amplified by As I write about in the book with my co-author Daniel Wagner, man-made risks, or they're anthropogenic risks that are being accelerated. What we're finding is that more and more of the economic costs of these events are skipping the private balance sheet, landing on the shoulders of the taxpayer. And so this case now, the coronavirus response in the United States is emblematic of that. In a matter of months, we have put on the table something close to $5.5 trillion of future spend that has to be put on the table today and to shore up the economy today. In my view, that's not the best way of mobilizing public resources. I think the better way of mobilizing public resources in these cases is to have an expectation that there will be large all hazards events that occur, and therefore it's better to pre-fund disaster risk sharing and pooling, try to crowd in private capital as well and the insurance capital, so that you have pre-funded these events before they occur. When they occur, incredibly costly to get it funded, it gets politicized, and then the dispersal of those resources gets caught up, not only in politics, but also just in the business process. The reality is simply you cannot buy insurance when your house is on fire. And so much of the world is really responding to this particular crisis in that ad hoc way.
Well, I think, again, you've mapped out a blueprint for the World Health Organization next generation in even describing how we deal with global pandemics. If we could commandeer any portion of Western military budgets into natural health disasters that we think are global, and put the global systems in to be able to mitigate and protect them, that would be an outstanding outcome from what it is we're experiencing right now. And I think many of us in the community, after the financial crisis in 2008, worked out, in my own narrative, I say that most citizens worked out that they are the lender of last resort. It's the taxpayer, ultimately, who one way or another is footing the bill, for a lot of these things that are going on. And I think there's a question, if you look at the CARES Act and the amount of money that the US has put into the system, there's a similar extraordinary amount in many, or unprecedented amount in many European countries, again, to shore up businesses, large businesses, small businesses, to make sure that citizens have a bit of protection through this period. What's extraordinary through all of it is that that's fine if you're in the G7 or the G20, but many countries don't have that power and can't sit back and say, well, we'll write as many checks or print money in order to get the economy through things. So I think some sort of measured approach to how we look at funding these things is, definitely one of the policy planks that we hope emerges from the situation. Although I don't know, again, in your circle, how you found this, but it's pretty difficult having productive conversations with policymakers or captains of industry when you're in the middle of a crisis. So I know many of us are, have open channels and are really trying to focus on where we can go in improving things. But again, in a time of chaos, I mean, have you found broadly in the US or in your global travels that policymakers now have opened their ears to this sort of discussion about how we can shine a light on things and where we must improve things, coming out of the crisis?
Yeah, I mean, I would be somewhat optimistic. I can't help myself, despite all the writing and musing that I do about risk and resilience and complexity. I think on the other end of events like this, it is a wake-up call that, the billions, if not the trillions, we have been spending on solving for yesterday's events and yesterday's risks haven't necessarily made us more prepared today. And so I do think this does set, in many people's minds, a bit of a reset. To your point about how we fund these big complex events, it's a sad state of affairs that long-range funding and planning, I think, is a general weakness in the political sphere as much as it is in the private sector. It wouldn't be very politically expedient to be the national resilience champion, and we do have really important organizations both in the public and private sector, that try to shine a light on these issues. But most people try to put their capital, and this is true at the household level as much as it is at scale. They try to put their capital in things that are very tangible, very near term. And then these rainy day funds, and this is one of the ironies of the coronavirus, is that it's a blue sky disaster. There is no smoking crater. There is no physical reason that precludes business and trade from occurring. And it is this completely paradoxical situation where, there is no trade, there is no foot traffic. And, the firms that could withstand that had a certain number of their months worth of operating cost on hand as the first buffer to sort of get through this. And I think this is a teachable moment in how to approach general economic resilience. Again, irrespective of the risk, the threat, the hazard, general economic resilience accrues. This is one of the major distinctions between resilience and risk, is that we could pre-invest in resilience and the impact has a compounding effect, and it accrues over time.
And speaking of industries, I think it's broadly easy for analysts to take aim at airlines, travel, leisure, entertainment, right down to restaurants, smaller mom and pop shops and things that have visibly been affected by stopping the productive system and asking people to stay at home and shut their businesses up. But do you see other areas of the broadly of the industry, the economic system that you're particularly concerned for? We've had a number of discussions around the food supply chain, and again, the asymmetry of just-in-time production stopping, food wastage. At the same time, we're experiencing, food price inflations. But are there any broad, concerns of other sectors that you think we should be keeping an eye out on? And then equally, are there particular sectors that you've seen really emerging well out of the crisis because they're positioned, with the sort of right services and have a high degree of social utility, I guess, at this time of crisis?
Yeah. I mean, I suppose it's easier to start with the first part, the last part first, which is, who are the quote unquote winners and losers in this? And I think net with a crisis this big, this complex, and one that has brought the global economy to a complete standstill and affected millions of lives, clearly technology and the role that technology has in providing the whole world any semblance of normalcy right now really demonstrates two things. One, tech is an essential aspect of business and operational continuity in the 21st century, and that's an unsurprisingly obvious statement. But on the other hand, the weakness is that the lack of ubiquity and the lack of really true universally accessible digital commons is an area of massive vulnerability, and therefore a post-pandemic opportunity is to figure out how to expand the perimeter, if you will, of high-speed internet connectivity and access to a range of basic services. I mean, there are millions and millions of students that wouldn't be learning today in the United States, but for the fact that companies like Zoom offered their platform at no cost through to the schooling system. On the other hand, where do we see massive vulnerability today? I think it's pretty clear that debt is a problem, and the debt burden that many people are saddling in the United States is an example. The blend of credit debt, more than $1.5 trillion of credit debt, and then when you add up all other consumer debt and personally secured debt, it's an enormous debt burden that hopefully, I think post-pandemic thinking will have to figure out, how do we reset that? How do you advocate for mobilizing and reinvigorating a society that even before this crisis, roughly 40% of the United States had between $400 or $500 of savings on hand to withstand a financial setback? Here, you've immediately eroded whatever savings you've had, and then you now have this forbearance problem that you described earlier of debt service doesn't wait. Debt is thirsty. It needs to constantly be fed. And so this is an enormous problem, and it begins with consumer debt, and then it extends into real estate and other sectors. So I think we have all collectively should have great cause for concern on how we recalibrate the debt burden that is saddling many people, especially when the taxpayer is the first line of defense anyway, when large events like this occur.
I think that's an excellent point. You know, it doesn't take too long for the taxpayer to work out that they've, you know, burned through their savings. If they're fortunate enough to have a pension, they may have to start tapping into that. Their income line is impaired, if not lost in some cases, and now they're holding the bag on all of this debt, not just them, you know, for themselves, but for future generations. And, you know, arguably, I know in my enlightened circles, folks think, well, my goodness, you know, the rational thing to do for this, you know, transient period is to put a buffer in and let's all agree to some sort of a debt jubilee. So I think we should watch this space, you know, as it emerges. And again, it is a story, a multidimensional story, but a story certainly of two simple halves, which is that many of us in the West are fortunate enough to have some form of debt or grant relief, where other parts of the world are really going to struggle through this. And you know, looking at the lockdown in India, where broadly workers are remunerated on, you know, a daily or a more frequent basis, and trying to shut down a system like that really causes consequential impact, you know, to citizens. So I think we will certainly keep our eye on this particular issue of debt that you raise. One last thought on COVID-19, and this is the sustainability argument, or the sustainability discussion, which usually starts with environmental, you know, environmental concerns. And it certainly would appear to me, from listening to many people, from policymakers to business folks to you know, my own community of average folks, that everyone's noticed things have become a bit greener. Many of us who haven't particularly had issues with home working and who've managed through it are starting to think, well, gosh, actually, maybe there are alternative ways. Do I really need to drive so much? Do I need to travel so much? And in my case, that's a really big ask, given you know, most weeks like you, I'm you know, traveling around. But do you think that this has really grabbed the attention of policymakers and CXOs who are focused on sustainability, that think, again, you know, we've really shone a light on this that we didn't expect, and then coming out of this, there's a much better opportunity for us to really be sustainable, or bake sustainable into the objectives that we have in our businesses and in our government scorecard on the economy?
Yeah, I mean, I have no doubt that just in the same way that we had to evolve from sort of corporate social responsibility, paying lip service originally to key corporate causes, then to then become a very serious pillar of business and strategy under this kind of moniker of ESG. I think the same will hold true today with what can we do and what can we forego with technology. When the crisis struck, effectively the future of work came at us overnight, and we probably ran the world's largest experiment of the perimeter of the corporation, the perimeter of employment, to push people outside of that perimeter to work remotely. And I think by and large, for many, particularly the fortunate, again, back to those zip codes and countries of birth, the experiment has borne fruit. And it's demonstrated that there's a lot of things that we can do that don't require being in a physical office or getting on a plane and a train and an automobile. There's a lot of things, however, that you cannot do, and there is no substitute. No small screen will do away with the value of human connection. And I think through this, we can learn to find better balance. A lot of companies are never going to look back and say, you know, you have to be in the office, and if you're out of sight, you're out of mind, and your lack of physical presence means that there is no productivity. And I think there's good qualities to this large operating experiment we've run on the planet, but it goes back to this equity question. This experiment only works to the extent you have reliable internet and to the extent you have the hardware to get onto those information on-ramps. And then this experiment extends itself to other facets of the economy. Payments, banking, credit, healthcare, all of these things that now are the only semblance of normal we have as the entire world is paralyzed. We need to figure out how to extend the perimeter to include many, many billions of people who have no such luxuries.
Well, and you raise a great point. This is as much about extending infrastructure technology in the inclusion quotient as it is the things we're speaking about quite often around financial inclusion, gender inclusion, etc. And then just lastly, I've been dealing with some of the questions as they've come in, but this is a really good one. Have you seen a country that had what you believe good practices or best practices when it comes to risk management and the treatment of the COVID-19 crisis?
Yeah, no, that's a very, very important question. And as we speak, I'm actually working on a post-pandemic blueprint that would look at, precisely the set of issues and areas that that were vulnerable beforehand, and the pandemic tilted them over into failure camp. And then when you look at the early sort of review of winners and losers, recognizing that no matter who you would rank, in some respects, it would be the best of the worst alternatives, that you have some common denominators emerging. Among them, I would argue, and I'm sure the after action reports will pick this up, women at the helm has enormously sort of contributed to positive outcomes with the crisis. Trust in institutions similarly has contributed. And then the rest gets a little technical. Number of hospital beds per capita, number of available healthcare professionals, including many countries have called up reservists to respond to this crisis. And then local availability and local conformity with lockdown requirements and social distancing requirements. I think when you look at that, you see countries like New Zealand, with its leader and with the way they've addressed this crisis, have emerged relatively rapidly from it. Countries like Singapore, the Scandinavian countries, Denmark, of course, being the best example that we could see, really worked through this in a very swift way, but didn't have to deal with the type of social tensions that I think many countries are now dealing with. It was less obviously a false choice to abide by public health rules because many people already had financial security in those countries.
I do have a vested interest here in picking out Arne Solberg from Norway. I think many people know that I live in Oslo and commute to London and New York regularly for work. She was on CNN last week, and I think on narrative, the account and the lockdown and the way that the government has dealt with it here has been very efficient. We certainly don't have the issue with the concentration of populations that big cities like London and New York do anywhere in Norway. But she very articulately said, look, in statistical terms, we're at R0, and was asked, well, what happens if we get to the second wave or if things start to peak again? And she said, well, we've actually got the mechanisms and systems in place so that we don't have to shut everything down. We can just isolate it, and we've almost got that first response team in place. And just the maturity of the narrative on with Christine Amanpour really, I think, delivered a strong message to me about what you're saying on that front. Now, let's switch gears again and move on to the Libra Association, which I know many people will want to hear about. And I can't actually believe that it's almost coming up to a one-year anniversary. It just seems that you folks have been so prevalent, and in my own narrative, I'm always talking about Libra, the project that launched 1,000 central bank CBDC projects, euphemistically. But can you just walk us through the high points of the journey? Because, boy, talk about a light shining on you guys. It was a lot of critical analysis applied, not just to your first white paper. The time you've spent and the time I've spent together with you, whether it's hanging out at the OECD and seeing you in action and advocacy platforms, I don't think many in the community would actually appreciate the amount of positive advocacy you're doing, not just at the U.S. The U.S. regulators, but with supranational regulators. And so, could you just walk us through, the past year and the sort of high points from your perspective?
Sure. No, thanks, Lawrence. And indeed, we're not a year in. I mean, we have 1 month to go on June 18th. Yeah. Next month. We're a year old as a concept, and then now as an association, and then hopefully in the not too distant future as a real user-directed payment network. And I mean, I think it's worthwhile bridging the earlier part of the conversation today and discussing the human consequence of a financial system that even before this crisis had 1.7 billion people on the margins, as completely unbanked, 1.3 billion around the world who are underbanked. Many millions of people in the United States before this crisis were relying on the informal sector, such as payday lending and a host of other very costly aspects of the financial system to get even the basics right. And how do you solve for financial and economic mobility and opportunity unless the bottom rung of that type of reality extends to more people, which is to the ability to pay people frequently, reliably, and often in as low cost a manner as possible. So if you needed a reason for something like Libra to exist and to empower many more people, the crisis like this one really just underscores a lot of the fundamental vulnerabilities we have in how we transfer value from one to another. So of course, it has been a long journey, these 11 months of advocating for Libra, both publicly, privately, and to make it a multi-sector reality. What I characterize as an uncommon coalition, that an effort this big could not be the domain of a single entity, even very well-endowed entities with the type of technological prowess that some of Libra's original conceivers brought to the table, that you needed to go at it in this coalition manner. And so I'm very pleased to say that today, the project and its new white paper reflects that we've heard the world in terms of the type of feedback we received in 3 public hearings in the United States, countless meetings with central banks and with multilateral organizations and many others. Have been incorporated into the design. So I characterize the last 11 months as a learning journey, and hopefully the next 11 to 12 months really becomes the period in which this project becomes very operational. The world needs these networks, and people need to be empowered to have greater access and control of who they pay, how they pay them, and with what frequency. And right now, there is no really good alternatives to doing that on a peer-to-peer basis at population scale.
And version 2 of the white paper addressed some of the key points of feedback you were getting, not just from members in the association, but from regulators and policymakers. And so one, again, I think the thinking that's gone into the governance model and the conclusion that, broadly, the medium to long term, the design all focused on a permission network, but that the sort of original basket of currencies has been, really broken into what I've sort of called G7, G7 stable coins or pegged currencies. Can you talk a bit more, particularly about that bit of the design in V2 of the white paper?
Yeah, I mean, I think the concept, and this is a really powerful concept that underscores the way I think of Libra and certainly the way the project overall thinks of itself, that what we're building as an open source technology platform is the very type of digital commons I was referring to earlier. And so I think true to that spirit and true to that nature, we would then have to have the ability of supporting single currency stablecoins on the network. I think of stablecoins today as the bridge between privately issued cryptocurrency constructs and stablecoin constructs that then bridge into the world of central bank digital currencies, and of which now today there are more than 80 central banks around the world looking long and hard at how do they fulfill their public policy priority of providing stable economic environments for their citizens, while at the same time not transforming their mandate so much that they themselves become a retail payment operator. So I think of these networks and I think of stablecoins as a hybrid or a bridge step towards a future of greater CBDC integration. Most of the CBDC experiments around the world are failing to look at retail use cases because of that complexity. So the advent of networks like Libra and the ability of the network to support single currency stablecoins, it really pays homage to that future state that we all can anticipate. And then therein, the idea of this multi-currency Libra coin really fulfills the cross-border payment mandate that was very much and remains very much in the original thinking here, that a remittance, which is the world's most important cash flow, greater than $700 billion a year, today cost about 7% globally to transfer, and it takes a long time. Think about the impact of receiving and sending a remittance in the middle of a pandemic. To go to a physical sending location, to then go to a physical pickup location, to then pay 7% for the transfer and for the money to then arrive a few days later. It's a false proposition to many, many hundreds of millions of people who keep that flywheel of the global economy turning, that they could only do that through physical means and very expensive means. And so the multi-currency Libra coin, as it's originally conceived, fulfills a mandate of a low volatility global payment instrument that can be settled in real time using these open Libra denominated wallets that again are open source technology. So we hope this empowers people and also empowers the public sector around payment innovation as well.
I think that's a very helpful framework for people to look at this, in essence, where we've got the fiat stablecoin model really acting as a bridge between, Bitcoin, crypto, public or private networks that didn't really seem to have a high degree of, this case, social or retail utility, but may have many functions in the private or the institutional market. On one end of the continuum, with central bank digital currencies, which, again, I think you point out, I had no idea there were 80 projects I was, aware of. 20 of them up and running, but it's around the social utility, I think, of people being able to actually use this level of digital currency versus the remittance market, which is an entirely separate use case and is helpful to move, for moving money cross-border. And again, with a particular retail focus as a use case. And can you talk a bit about some of the governance or compliance changes then that have gone into V2O, the white paper, to support that type of ecosystem?
Yeah, no, thanks, Lawrence. And I think to go back to the domestic setting, very briefly, for a period of maybe 24 hours or so, the CARES Act had a provision in there for the creation of a digital dollar and a digital wallet available to all US citizens. And while the provision was very short-lived, the ability to provide direct relief from the government to the citizen, where today we have a one-sided economic relationship, we're relatively easy to identify for tax purposes, but when we need to reverse the flow from a public policy point of view, it becomes analog and complicated. And so even in the United States, in the domestic setting, the advent of these types of wallets and digital currencies have many powerful opportunities and implications. Rural communities is another example. Things like micropayments and parameterized payments, programmable money, become very powerful, whether you're talking about insurance that liquidates on a geo-referenced claim event, or whether you're talking about being able to send people small amounts of money, which by today's standards often costs more than the sum of money sent. So there's a whole raft of domestic use cases and opportunities that these networks can enable. Now, on the compliance front, as I've said all along, for this to succeed, not only do you see it in the fact that we've asked for permission to get this up and running and we're seeking the appropriate regulatory regime for it, rather than forgiveness, which is most often the way big tech comes at new innovations and new breakthroughs. For this to succeed, compliance, innovation, and financial inclusion cannot be competing forces. And the operating reality today is that when many of the world's financial compliance frameworks were created, they were created in part out of real fear of real transnational threats that were being exported from around the world, 9/11 being the most poignant example. And so we didn't have at our disposal platforms like blockchain and public blockchains that can sort of irrevocably record transaction and transaction history over time. We didn't have the ability to build coalitions, and let alone the types of technologies that we have with solutions like Elliptic and CipherTrace and a number of many others that are really at the cutting edge. And so if you were designing a 21st century payment system that was designed to be retail, peer-to-peer, low cost, low friction, high security, you would use many of the very design principles the Libra Association are bringing to the equation to do that. to really demonstrate to the world that financial inclusion and innovation and compliance and very high bars of oversight and consumer protection are not in conflict. You've got to go through exactly the 12 months that we've been through so far, plus many more, to ensure that there's an appropriate regulatory regime governing this work.
Well, and I love that. I think that, something Clay Christensen would have particularly focused on in his whole focus on innovation and the innovator's dilemma, regardless of whether your product is a low-end disruptor or not. It is the utility of the job that it does and the thinking of the design that really, in this case, drives the utility, the adoption, the open association, consensus, and approval. So it's such a fascinating story. Now, I know you've been working on building out the team and members of the association, over the past year, but can you give us an update on some of the new talent and some of the new members that have come on board?
Yeah, sure. So on the talent score, I'm pleased to say, we now have an incoming CEO joining the association over the summer in Stuart Levy, who is currently the chief legal officer at HSBC, and prior to that served as the first U.S. undersecretary for countering terrorism and for financial intelligence, so helping effectively architect many of the very rules that I just described. Additionally, we have recently appointed a general counsel, Bob Werner, who has already joined the association and who brings just an immense background, both in the public sector in terms of financial compliance and risk management, and critically global regulatory work, as much as he has that experience in the private sector as well, in the range of different global banks. So I think these are the two most prominent C-suite appointments we've had. We've also had, over the last few months, a number of new members join the association, and the most recent round include two crypto-focused and sort of technology-focused investors in Slow Ventures and in Paradigm, and then we also have the Singaporean entity Temasek has joined the association as well. And what's worth recalling is that as a member of the association, you really have three priorities. One is to contribute to running a validating node on the Libra blockchain. The second is to contribute to the governance of the association. So we very much are sticking to the model that when all else fails and when the technology fails and whatever may come of these types of ideas, governance is the breakthrough, as our mutual friend Tamika Tilleman describes it. And so I think, Libra's big breakthrough, in addition to everything we've discussed so far, is really to pull together this uncommon coalition. One member, one vote, and a real governance model that is weighted towards each member having a seat at the table. And so when you fast forward 5 years from today, and you now have this up and running institution with that type of governance model in play, Libra as a payment system really then does become public-private commons, right? Digital commons. And I can't wait to see the types of use cases we can enable by having stuck to those principles.
Well, I'm a big fan of that. My view is always deliver the infrastructure with a high degree of utility, and the market will work out which products it wants to see and how it evolves. So, and just give us an idea, how many members in the association now?
So if my math serves, we have about 27 members of the association today. This is sort of a number, I think, that's consistent with our launch plan for 2020. So we're very much eyeing getting the network regulated, the technology activated, and the initial sort of solutions available on the network available in 2020. So at this point, we have 27 members, and then we're working, I know our team are working constantly to vet interest from organizations around the world. So you can anticipate additional member development over time, but right now a lot of our energy is very much focused on the international review that's being carried out of projects like Libra and the Libra project itself, which is, the Financial Stability Board has ongoing review that we're substantively contributing to. The European Union has a range of different consultations. on digital assets, blockchain-based payment systems, and so on, that we're substantively contributing to. And then lastly, of course, we have our licensing process under the purview of the Swiss regulator FINMA. That itself is very much a global endeavor with something like 20 different countries participating in that review as well. So there's a lot of work to be done in the balance of 2020, but we're very focused on being ready for launch later this year.
Right, and later this year, is there a specific launch date or zone? Is it Q4?
Yeah, so I think Q4 is the safest range I could give you without putting myself in a corner or the project in a corner. But nevertheless, I think, you know, better to get it right than to get it fast. And I think getting it right means we have the appropriate licensing and regulatory oversight in place before the end of the year.
Well, Dante Disparte, what an excellent almost hour. We're coming up to the hour. Can I thank you very much for coming on to the Leaders Global Town Hall series that we're running with GBBC. It has been an absolute pleasure.
No, thank you, Lawrence, and thank you to the GBBC and the Global Digital Finance teams for putting this on today. Very much appreciated.
Our pleasure. Right, to close things out, thank all of you for joining today. I know we've had a very large number of people wanting to listen to what Dante has to say, so thanks. The next Global Leaders Town Hall webinar is on the 2nd of June, which is next Tuesday, and we'll be joined by Sheila Warren, who's the head of blockchain at the World Economic Forum. So thank you again for joining us today, and bye-bye. Have a great day.